Milking the markets for the week beginning 1st March 2021. The markets appear to have resonated to our last week's sardonic reference to Wile E. Coyote's fall. The US bond prices led from the front this precipice. The Nasdaq 100 as well as gold followed this fall. On Thursday, the US Treasury yields surged past 1.60% on apprehensions about the sustainability of the expansive measures of the government, which were intended to infuse humongous liquidity. However, on Friday, the yields softened to 1.44%. The Nasdaq 100 settled at 12,900 and gold settled at $1,734 an ounce. US President Biden's military orders directed against Iran fueled the Brent prices to surge past $65 per barrel. On Friday, the Nifty lost 4%, though the weekly decline could be pegged at 3%. FIIs pulled out 8,300 crores, while domestic institutional investors pumped in close to 1,500 crores. The bank index lost 5% and Bandhan Bank stock was the only one that maintained its advancing trend on Friday. Thursday, the bank index had registered smart gains with Finance Minister's announcement about permitting private sector banks also a share in handling the government business. Bandhan Bank stock at 345 rupees is reflecting positive and bullish technical undercurrents, with RSI at 50 and trading above the simple moving averages. The only negative could be the MACD in below the center line. Fundamentally, with net NPA at 0.26% and reasonably consistent earnings record, these impart a positive grading for this stock in the short term. The huge swings in stock prices was reflected in the derivative prices too. The volatility index VIX spurted to 28.14. It remains to be seen whether the markets will take any cue on Monday from the GDP growth ending in positive zone for the quarter. Though manufacturing and agriculture have registered growth, consumer spending remains muted. Government spending has also increased, but the annual estimate for the GDP remains negative, a contraction, and it has been raised from 7.7 to 8%. Till Thursday, Indian rupee was maintaining an appreciating bias against the dollar. However, the Coyote's fall appears to have transcended to the currency market, and it lost 1 rupee against the dollar on Friday and settled at 73.47. The FII pullout on Friday could perhaps have exacerbated this fall. However, this could enable RBI to stay away from the market from intervening for the short term. Accordingly, rupee is likely to test the 73 level in the coming week. The bond markets mirrored the US Treasury yields. The benchmark 10-year bond yield rose by 10 basis points week over week, and the 3-year IRS points rose by 15 basis points. Have an interesting week ahead.